Hi, my name is Aziz, a fellow of the Association of Chartered Certified Accountants. Welcome to part 4C of the course Bookkeeping up to Final Accounts. Today's topics are processing pre-trading capital transactions, that is lease, website development, and building enhancement. We look at the double entry aspect. Treatment of one-off transactions with other organizations. Now, let me state that it is not advisable to open a purchase ledger for every supplier that you are going to trade with on a one-off basis. If you buy something from a supplier and you are not likely to deal with that supplier again because it's a one-off, you'll be wasting your space, your purchase ledger space, by opening an account for that supplier. So, ideally, that transaction should be passed through the nominal ledger by means of a journal entry. It is also unprofessional, let me point out, to journalize invoices from regular suppliers, as those invoices will be lost track of. If you collect invoices from your regular suppliers and you pass them through the nominal ledger by way of journal entries, you will lose track of those invoices and you will not be able to produce reports which will show how much you owe your suppliers. Actually, those invoices may be lost in the system. That is a very, very unprofessional practice and should never really be engaged in. Nobody should engage in that. You see. Now we also talk about ordinary share capital, the double entry aspect of it. And then I will describe petty cash accounting, talk about petty cash accounting and its relationship with the main cash book. Now, if I start by processing pre-capital trading transactions. Now, like I said before, Mr. Joe Bloggs withdrew £50,000 from his pension account, or pension pot as they call it, and then lent that money to his business. He had set up the company at the time, but the company had not started trading. But meanwhile, he needed to buy things that will be used in the company, like website development, and then the lease, the building that he had leased from the council using the name of his company. Also, there were little costs surrounding the lease. Now, again from his pocket. Now, all those costs will be treated as a loan from Mr. Joe Bloggs to his business, his company, because the company, like I said before, is a separate legal entity. So when money is spent for a company, on behalf of the company, by the company's director, the director will be lending that money to the company because the company is a separate legal entity. Therefore, the director will be entitled to now withdraw the money from the company or collect that money from the company when the company is in a position to do so, to repay that director, without there being any tax implication. So, now, all those transactions, the initial business transactions, were one-off transactions with suppliers that the business was unlikely to trade with again, like purchase of computers, like website development. The company is not likely to be buying computers on a regular basis from the same supplier, from that supplier, and the company is unlikely to be developing websites every year. So, those are one-off transactions, and they will be passed through the nominal ledger by means of journal entries. Okay? So, let me start by dealing with pre-trading expenditure, by processing pre-trading expenditure. Now, what I've done here, I have prepared draft journals. Okay? It is very important that you do not just put transactions in the nominal ledger. Very, very bad. It's very unethical. It's very unprofessional. You need to prepare a draft of that journal first. Present that draft to your superior or head of finance or finance manager if you are an assistant accountant or a bookkeeper. The head of finance or finance manager will approve that journal. Make sure everything is okay, and then if everything is okay, he or she will sign that journal off for processing, you can then post them into the nominal ledger. Now, that is called input control. And the purpose of that is to ensure that the nominal ledger is not messed up with incorrect entries. Because at the end of the month or at the end of the year, when you have to present your report to your to the board of to your management board, you do not want to spend a lot of your time correcting journal entries. That is why input control is very, very important. Now, before you post journals, you have to number them. You have to number them. Journal number 1, journal number 2, and you have to date them. That will make it very easy for those journals to be tracked. Okay? And if you need to file them file them somewhere, you have to file them in journal number order. Again, for ease of identification and retrieval. So the first journal that I'm going to process now relates to the leasehold building that the leasehold building contract that the company entered into. The total lease amount, including interest, is £250,000. But I have split it into leasehold land and leasehold building. I've split it into land and building element. Because when we get to the depreciation stage, you will see that only the land element will be depreciated. The building element, only the building element will be depreciated. Sorry, the land element will not be depreciated. Okay, nobody depreciates land unless you are in an extractive industry, like if you are in the oil and gas industry, and then of course the land from which you extract your gas or oil will be losing value each time you do your extraction. So on that basis, you will depreciate that land. But if you are not in that industry, you should not depreciate land. Okay? Because you cannot depreciate land, it is for that reason that land, when you have a building sitting on the land, you have to split the cost into land and building element. Okay? Now, the double entry here is clearly displayed in the journal entry, the draft journal. You have to debit leasehold land and building account as an asset, but at the same time, because you have to pay, you are committed to making lease payment to the council, that is the lessor, over the lease term, you must recognize your obligation to make that payment to the council. In other words, you record an asset as well as a liability. And of course, the liability, while the asset will be on the left side, that is debit side, the liability will be on the credit side. Okay? Let's do that first. Journal number 1. Okay? Now, the nominal ledger is here. So, the nominal ledger, I'm going to look for code number 1000, which is leasehold land. Like I said before, the transactions will be deemed to have occurred on the first day of trading. Because on the day when the lease actually was entered into, the contract was entered into, the company had not commenced trading. But on the first day of trading, we are going to, when the record was actually set up, we are going to put that there. 1st April 2020, the first day of trading. Okay? Now, yes, the particulars, that is what's in the nominal ledger, on the journal. They must match. So, land element of 25-year lease from Building Council. So, I'm going to plant it there in the nominal ledger. Easy peasy. That's the land element. And again, journal reference number is 1. Journal number 1. And the land element, like I said before, is £100,000. 100,000. Yep. The building element, which is leasehold building, the building element again, 2020. The building element, again, the description must match, as described by the journal entry. Building element, let me just make that clearer. Okay, and 14 size, font size 14, to make it clearer so that you can see it properly. Okay, now the building element is £150,000. Yeah, £150,000. And the description is here. Easy. Again, journal number 1. So if let's check our trial balance. You must always check your trial balance. You can see our trial balance is out of balance by £250,000 because we have not completed the other side of the double entry, and that other side is this. So finance lease. You see, finance lease obligation is the other side of the double entry. Again, 01/04/2020. Yeah, finance lease commitment for 25-year lease payment to Billington Local Authority. That is the other side of the entry. And again, the journal entry is, the journal number is 1, JNL 1. That is £250,000. £250,000. Now, if you check our trial balance now, it has balanced. You see, your trial balance must always balance. Your trial balance will only balance if your journal you are about to put into the nominal ledger is balanced. You must make sure it balances in any way. Anyway, if it doesn't balance, your finance manager or head of finance will not approve it. And many accounting systems will not even allow you to post it anyway. So the trial balance has balanced. So both the double entry and the credit and the debit, the credit and debit side have agreed. So we are okay. We can post the journal, and we have posted the journal. So the second journal will be this one. Now the second journal relates to building enhancement. Like I said before, when Mr. Joe Blocks incurred all these costs on behalf of the company had not started trading, had not started making any money of his own. So the money was treated as a loan to the company to start with. So he lent the money to the company, and this money can be collected when the company is able to do so, is in a position to do so, to pay him, and there'll be no tax implication for him. He can draw this money later on, but meanwhile, it's a liability on the part of the company, a liability to the director. So the double entry will be to debit the asset account and credit loan from the director's account. So, but again, what we will credit, I will show you what we are going to credit and what we are going to debit. Now, building enhancement. This is building enhancement. Okay, this is the breakdown of all the costs. Design of workshop layout, that is to be capitalized. Okay, and it will go under that code 1020. 1020 in the chart of accounts. Code 1020 in the chart of account. 1020 is this. Okay, it is building enhancement. Now, the next item, again, planning application fee will be capitalized. Like I said before, when you incur costs and you are charged VAT, which is reclaimable, you only recognize as your business expense the net amount, not the entire amount. The VAT element is reclaimable, so that's a different matter altogether. So we are going to just capitalize the net amount, which in this case is £8,000. Now the next item is planning application fee, which is £500. That again will be capitalized. Remember I said earlier that it will be expensed, but again I think it should be expensed because it is a cost that has been incurred in bringing that building into the state when it will be fit for use as a business building for motor repairs. So any cost that will enable an item to be brought into a location or condition where it can be used for business purposes must be capitalized, and this planning application fee is one of them. So it will be capitalized. Site clearance is another cost which I have decided to capitalize for reasons already explained. Construction or adaptation costs. which is net 20,000 pounds, gross plus VAT 25,000 pounds, net is 20,000 pounds. I'm going to capitalize the net because the VAT element is reclaimable. That goes to code 1020. Now, sandwiches for opening the day, for opening day, when the building was inaugurated and the mayor of the town was invited and press photographers were there and they bought sandwiches for 300 pounds, that I have decided to put under business entertaining. Now, the cost I'm going to capitalize here will not be all these individual items at all, you see, because we already have a record for that. There's no need for me to waste nominal ledger space by capitalizing every one of these. It will be the total item, the total amount falling under this code. So if I do that, so select, and the total amount is 32,800 pounds. No, 32,500 pounds. Sorry, 32,500 pounds. If I use the filter, just to be on the safe side, just to check. Yeah, 32,500 pounds. That's what I'm going to capitalize, you see, not the individual amount. We already have a record for that. So I will put 3200, that code 1020. 1020. Yeah, it's already there. Building enhancement, 32,500 pounds. Entertaining, which is for sandwiches, that's 300 pounds. That goes under business entertainment. The VAT element, which is reclaimable, is a current asset while it remains claimable. It is reclaimable, so it's a current asset that will be debited to the current asset account, that is input VAT reclaimable. VAT on purchases called what they call input VAT. Now, because all of this money came from the pocket of Mr. Joe Bloggs before the business started trading, it will be treated as a loan from him, and that will be and as a loan from the director, that will be a liability of the company. Liability, the company owes that money to the director. So the credit entry will be the entire amount of 40,800 pounds in Mr. Joe Bloggs' loan to the director's account. Now, okay, let's proceed with the nominal ledger entry. So I'm going to look for code 1020 in the nominal ledger. Code 1020 in the nominal ledger. Yeah, fine next. Yeah, building enhancement. So again, 0104 2020. Right. Conversion and partitioning of leasehold building. Yeah, that's the description. And that's journal number 2, JNL 2. How much is the cost? The cost, according to my journal entry, and I'm not going back to that list anymore, I don't need it, 32,500 pounds, that is debited. Okay, that is debited. The next item is sandwiches for inauguration. That goes under business entertaining. So I'm going to look for business entertaining in the nominal ledger, 6345. Let's put that under business entertaining. Again, 0104 2020 business entertaining. That's the date, and the description is sandwiches re-inauguration. Again, journal number JNL 2. Okay, and the cost is 300 pounds. 300 pounds. So the next item is input VAT, reclaimable input VAT, which is code 1650. Reclaimable input VAT 1650. Again, I'm going to put 0104 2020. Yeah, input VAT building enhancement. Journal number DNL to journal number 2, and the amount is 8,000 pounds. Now, if we go back to our nominal ledger, our trial balance. Check our trial balance out to see what has happened. Right, trial balance. We're out of balance by £40,800 because the double entry aspect of this transaction has not been completed. So, and what is that aspect that has been left undone up to now? That aspect is the bit about the loan from the director. That needs to be credited. Now, that comes under code 2501, 2501, 2501, loan from the director to the business. Okay, 01042020. Now, journal description is this. Yeah. Initial expenditure by the director, and that is £40,800. So, no, that's credited. £40,800. That's to be credited to the director's loan. Yep. So, if we now go again to our trial balance, you will see that it has balanced. So, your trial balance must always balance, like I said before, but keep checking, in the next item will be, we've done building enhancement. The next item for which I prepared the journal is journal number 3, which is to do with ordinary share capital. Like I said before, Mr. Joe Blogs and Mrs. Joe Blogs, each of them invested £100 in the business. Okay? Now, ideally, that £100 should be paid into the company's account because they have invested in the company, bought shares from the company. But what has happened is the company did not have a bank account at the time. Nothing has actually started. Nothing has actually kicked off. So, that money will be credited into ordinary share capital account. Okay? Credited in the sense that it's a liability on the part of the company to the investors, and the investors in this case are Mr. and Mrs. Joe Blogs. But instead of debiting the cash book, we will use the amount due to reduce the balance on the director's loan account, to reduce what is owed to Mr. Joe Blogs. That's what we will do because no cash has actually been collected from him. Now, the reason for lumping his wife's money, payment with his own is that he's going to buy the shares for his wife anyway. He took the woman on board as a director. Just okay, join the company. But in reality, the company belongs to him. That is the reality. Mrs. Joe Blogs does not know anything about motor repairs. That's why she's only a bookkeeper there and a receptionist. It is Mr. Joe Blogs who actually is in charge of. He's the owner of the business, really. And like I've been saying, the bulk of the money that has gone into the business is from his pocket. £50,000 from his pension pot, not a penny from Mrs. Joe Blogs. So Mrs. Joe Blogs is only there nominally, really. That is the reality. So all of this money, the amount due on the shares will be used to reduce what is owed to Mr. Joe Blogs. So let's deal with the double entry side. In the nominal ledger, we look for code 3000, which is for ordinary shares. 3000, ordinary share capital. So 01042020, okay, and then with the journal, ordinary shares of £1 each. Very important that you describe it properly. JNL 3, journal number 3, credit £100. Okay. 100 ordinary shares, so £1 each. Let me just copy from there. Again, JNL 3, and that's £100. Again, if you look at the trial balance, we're out of balance by £200 because we have not completed the other side of the double entry. So, loan to the director. Let me go and look for that. Loan from the director, loan from the director. Again, 0104. I'll just do that. 2020. Go to the trial balance, and then payment for shares. Easy. This is JNL 3. This one is GNL 1. that £40,800. I wonder what journal number that is. Now, again, we use it to reduce what we owe him. That's £200. Now, let me go and look at the trial balance. See, as again, it has balanced. Now, let me deal with this one. Journal and initial business expenditure. £40,800. What's the journal number? Yeah, that's GNL2. GNL2 is that one. GNL2. So, the trial balance has balanced. So, we go to the next item for which I've prepared the journal, a draft journal. GNL3, the next item. No, GNL4 is the next item, sorry. Now, the company, again, Mr. Joe Bloggs used his personal money, okay, money from his own pocket, to buy computers for the company. He went to, here is the invoice from DC World. DC World, on the 1st of July 2019, when the business had not even commenced, Mr. Joe sold 2 computers. As you can see, the description is here. The description of the computer is here. Here is the description. Yeah, 8P pavilion and so on and so forth. 256 gigabytes, 2 white computers. Yeah, quantity 2. Shipped to bill to Mr. Joe Bloggs Auto Services Limited, because he told them to issue the invoice in the name of his limited company. Otherwise, he will not be able to claim it as a business expense, and he will not be able to reclaim the VAT. Yeah, so he told them, please do not issue the invoice in my name, issue it in the name of my limited company. And that's what they did. The total cost of the computer, 2 computers, is 1578 excluding VAT. The VAT is at 20% is £315 and 60 pence. So that brings the total cost including VAT to 1893.60. But we are only going to capitalize the net amount, not the VAT amount. I mean, not the VAT inclusive amount. So, like I said before, this is a one-off transaction because Joe Bloggs Auto Services will not be buying computer every month or every day. It's just a one-off. So, DC World is not a regular supplier. So, it will be appropriate to pass this through the nominal ledger by way of journal entry. It will be a waste of time to create an account for a supplier that you are not likely to use again. So, it's a nominal ledger item. So, for that reason, I've debited the computer equipment account with 1578. Debited VAT reclaimable because we have to reclaim the VAT. And then loan from the directors. I've credited it because the liability, the company is now going to owe that money to Mr. Joe Bloggs. So let's do the journal. And on the assumption that the finance, I'm happy with it. I'm the finance manager here. I'm happy. Okay, but if a bookkeeper was in charge, the bookkeeper will have to ensure that the finance manager is happy with the journal. Okay, and as you can see, the journal, the debit and credit entry of the journal has agreed. So the journal is, when he hit the trial balance will balance. I mean, when he hit the journal, the ledger, the trial balance will balance. That's guaranteed. So 1050 in the nominal ledger. 1050 nominal ledger. Yeah, financed. Right, computer equipment. 0104 2020. Right, this is the transaction description. It is JNL 4. Okay. The VAT exclusive amount for both computers is 1578, because that's what we are going to capitalize. Okay. That's the VAT exclusive amount. So the next item, VAT. Right. VAT reclaimable on both computers is £315 and 60 pence, and that is going to be debited to input VAT reclaimable account. Input VAT reclaimable account. And that is JNL 4. JNL 4. And that is, what is the amount? The amount is £315 and 60 pence. £315 and 60 pence. Yep. That is the VAT reclaimable amount, and it's a current asset because it's reclaimable. Now, if we go to our trial balance again, we are out of balance by 1893.60 because we have not done the other side of the double entry, and that other side is the amount which we are now going to treat as a loan from the director. Okay, 2501 is the code, the nominal ledger. 2501, loan from the director. Again, the date is 1st of April, and the description of that will be that, and the journal entry is GNL 4, additional loan from the director, 1893.60. Yeah, 1893.60. Now, if we check out our trial balance, our trial balance again, it has balanced. So the trial balance has balanced. Okay, so the second item, another item that I'm going to deal with now is this one, website development. Website development cost. Now, if you look at all this breakdown that I have here, website development costs, feasibility study, again, that is going into 6255. What is the code number? 6255. What is it called in the chart of account? 6255. That is sundry expenses. Okay. Right. Website development cost is going to be capitalized. It's in the I'm going to pass that to website development cost account as an asset. As an asset. So it is an asset, a fixed asset. I don't need to use the individual item on the list anymore because we already have a record for that. We already have a record for them. No need for me to waste ledger space by entering them one by one. I'm simply going to bundle all the items that belong under the same code together. Like in the case of 1070, which is computer, which is website development. If I just filter like that, it will give me all of these. I don't have to enter all of these: domain name, developing operating system, application code. That would be a complete waste of ledger space. So it's just that single amount that comes under that code, that single amount that I'm going to now pick and put in nominal ledger, which is 3320. So, and I've put that in my draft journal. And this is journal number 5, and the date is 1st of April 2020. You must number and date your journal for ease of identification. Now, sundry expenses, website development. That is the only item on this list that falls under that code, and that is the only item that is going into that code. So, the sundry expenses. The other item that are going to be expensed, that is not capitalized, yeah, hardware and software specification, preference selection, and another one is training. Now, if I deal with these two first, hardware and software specification, it is the net amount that I'm now going to expense, not the VAT inclusive amount. Okay? And that net amount is £200. Okay? And that I have just put together. No. Website development. Sorry. Sundry expenses, £240 actually. £240. Sundry expenses. General office expenses. The items, both items, the item under general expenses is 160. 160, because I want to be able to describe them properly. That's why I put them here like this. Okay, hardware and software requirement specification, preference selection, that is coming under general sundry expenses. Staff training, that I have decided to expense, that's £720. That is the cost of training the employees who will take over who will be using the website on a day-to-day basis. Now, input VAT control account, that is input VAT incurred. Look at the VAT incurred, that is 1120. That is, like I said before, is a current asset that will be debited to input VAT reclaimable account. Input VAT reclaimable account. Now, the other side of the entry, again, because the director spent all this money out of his pocket, the other side of the entry will be to credit his account, the loan from the director's account. Now, again, let's get on with the nominal ledger entries. Now, code 1070 is what I'm going to look for first and foremost. 1070, which is website development. Now, the date is 01/04/2020. And the description is going to be, which I've already put on just website development. That's what it is. Okay, website development. And it is JNL4. I hope I'm right. JNL, journal number, no, it's journal number 5. Sorry, journal number 5. JNL5 is JNL5. JNL5. Yeah, the journal number is 5. And the amount to be capitalized is 3320. Yeah, 3320. So that is 3320. That's the next item on the journal is sundry expenses. 6255. 6255. Sundry expenses. Again, 1st of April. Yeah, feasibility studies, that's £240. 6255. Sundry expenses, website development, or feasibility study. Let me change that to feasibility study. Feasibility study. Website development. Yeah. JNL5, £240. So, next item, general office expenses, 6340. 6340. Again, 01/04/2020. Yeah, because I'm going to enter them separately. Yeah, easy. JNL5. Yeah, that's £200 together. I'll just enter them individually. So one is 160, the other one is £40. That's £200 altogether. Again. Right, okay. The next item, employee training, that comes under staff training, 6211. Let me go and find that. 6211. Yep. 01/04/2020. That's staff training. JNL5, journal number 5, that's reference number and then we come that the amount is £720, £720. So the next item is 1650 input VAT reclaimable, which will be debited to, because that's reclaimable. So 1650. Again, the date is 0104, and then the description is here. GNL 5. Yeah, input VAT reclaimable. Right. Now, I haven't posted one side of the journal. Let me go and look at our trial balance. The trial balance is now 5,600 out of balance, because the other side of the double entry, which is loan from the director, now needs to be put in. Okay, loan from the director, 2501. That's the code, 2501. So 0104. Initial business expenditure incurred by the director. So GNL 5. So that amount is £5,600. So if we go back to the trial balance now, it has balanced. It has balanced. So that has been done. So that brings me to the other item on the list, which is, we've done with the ordinary share capital, with the double entry aspect of ordinary share capital. Now, let me now talk about petty cash account. In any normal environment, normal environment, because sometimes things are not done normally. In any normal environment, you have a cash book, and then you have a petty cash account. The petty cash account will be used for small items that you do not necessarily want to place order for with suppliers. Small items that we need in the office regularly every day. Now, if you want to buy, say, something like sugar or tea, or biscuits for office consumption, you don't want to be placing items orders with suppliers for that, or contact a supplier to supply. You can just walk to the shop, the local shop, and buy them. No, those small items, there has to be an account for them. You see, you create what they call a petty cash account, and then limit the amount that will always be the size of that petty cash account. See, that is called the petty cash float, under what they call the impressed system. So what will happen is, you will issue one check from the cash book, maybe issue one check to draw money from the bank, say £300 from the bank account, and put that in the petty cash tin, your office petty cash tin. That money will be spent until it gets to a level when you have to top it up again to make it £300. Now, this is how it happens. When people go out to buy things, receipt will be obtained for whatever they buy. They bring the receipt to the petty cashier or the bookkeeper. The bookkeeper will look at what they bought, collect the receipt from them, record the transaction in the petty cash book. When the petty cash balance gets down to, say, like £20, you will instead of giving, because the cash float size is £300, you will then issue a check for £280. Yeah, you issue a check for £280, draw that £280 £80 from the bank and put it back in the petty cash thing. Haven't made sure that every item of expenditure on the receipt presented to you by the petty cashier is genuine, and you have checked that everything's okay. That is when you issue. The petty cashier will account for the money that has been spent, do an analysis of the cash expenditure, present everything to you, and then you approve that check that will draw that petty cash of £280 from the bank. That is called the imprest system. It is totally wrong to encourage people to take money from what they've collected from customers, cash that they've collected from customers, and use it for petty cash expenses and then bank whatever is left. If you do that in your business, you are opening the door for your employees to steal from you, because there is no guarantee that they will not take more than what is necessary. I mean, in any environment where that occurs is a very fertile ground for theft. Yes, cash defalcation. People will steal from you if you don't maintain a proper petty cash system. Always insist that cash collected from customers must be banked intact. Nobody must touch it or use it for petty cash expenditure. So, I will stop here today. Please do not forget to click the subscribe button. Please like and share, comment, like and share, and subscribe, so that you can be automatically updated anytime I put a new video on my site. Do take care, and I see you soon. Bye.